But let me first start by asking you about what we've seen from the Nasdaq overnight, this exaggerated price data. They're still trying to work out exactly what went on there. I wonder, though, if we can draw any conclusions about just the complexity now of the technology deployed and used by the exchanges and some of the limits to that technology.
Well, good morning, Tom, and it's great to be with you here in Beijing. You're right that technology is a huge part of what we as exchanges do these days. I'm not going to comment on any other exchange, but clearly last year for us at London Stock Exchange we had the 3 busiest trading days in history, in our 300-year history on the London market, and we make huge investments in technology to make sure everything runs smoothly, is resilient, and our customers have continuity.
And you need to have that oversight all the time.
Absolutely. Our regulators are very focused on making sure we have oversight of the market, monitoring trends, and also making sure that the new developments in the market in terms of high-frequency trading, algorithmic trading, are kept under good oversight and supervision.
So what are you seeing in terms of China? What are the opportunities? How are you pitching the London Stock Exchange to Chinese businesses here? How are you kind of trying to carve out a slice of the market here, whether that's IPOs or Chinese renminbi bonds?
London Stock Exchange has now been active in China for a number of years, and actually this conference comes at quite an exciting time in China with the launch of the Bond Connect yesterday and also the prospective inclusion of Chinese A-shares in global equity indices. In London we have one of the largest international markets in the world. We are the leading offshore centre for renminbi, and that's visible on the London Stock Exchange with over 100 renminbi bonds on our market, including the Chinese government doing their first ever offshore sovereign bond on the London Stock Exchange last year. So we see huge opportunities in fixed income. Also, we have 35 Chinese companies already listed on our market, and we're working on some quite big structural projects here, most notably the Shanghai London Connect, announced by the President of China when he was in the UK 18 months ago.
Yeah, I wanted to ask about you. What is about the Shanghai London Stock Connect? What is the time frame for that? How much closer are we to that actually being put in place?
So we're working on an implementation plan and getting that implementation plan ready hopefully this year, and then it'll be a matter for the 2 governments and the authorities to decide on timing. What we're trying to do is bring our 2 markets much closer together. There are some fantastic opportunities for international investors to invest in high-quality Chinese companies, and also London has the greatest range of international companies in the world, which will be of interest to Chinese investors too. We're trying to bring those 2 systems closer together in this connection. And
you touched on some of the reforms that are taking place here in China, whether that's the Bond Connect or the inclusion of those A-shares in the MSCI index. What do you think the implications are for the market? There's a bit of skepticism about just how much appetite there is from international investors to get involved at this stage.
Well, you have to think about this over the long term. China is going to be one of the largest, if not the largest, capital market in the world over the next 20 to 30 years. The size of the bond market alone is $9 trillion. So there are major opportunities for investors who are looking for higher yields they might be able to get in other markets to invest in China. And looking the other way, the Chinese asset management market is growing very fast, and there will be opportunities for Chinese investors to look overseas, to diversify their holdings and to invest in international securities. So we think the opportunities are immense. We're seeing Chinese companies also very active on our market in terms of M&A. Buying up UK, European companies looking to raise capital in the international markets to finance their growth and strategic ambitions.
Are you seeing that change at all as a result of the capital controls that have been put in place? Is that capital raising changing? Are companies trying to raise more money offshore, Chinese firms? Is the M&A starting to slow down at all, or is it continuing at the same level?
Well, this has been somewhat cyclical. I think last year was particularly active in the renminbi bond market, and with Chinese companies active. That perhaps has been a little slower this year, but I think over the long term, I think the direction of travel is pretty clear. It'll be increasing very significantly.
And in terms of attracting Chinese firms to list on the London Stock Exchange, what practical steps are you doing to do that? Because the competition's increasing, of course. What are you saying to them? How are you going to lure them over to London?
Well, London, we have the most international platform in the world. We have more international companies in our market than any other exchange anywhere in the world. And you can see that just in the last few months with 43 IPOs in our market, with companies from China, from Israel, from Egypt, from Dubai, from the US, from Canada, all over the world, using the international investor base, which is uniquely global in London, to sell their story. And I think that is definitely going to appeal to Chinese companies, building on the 35 Chinese companies we already have.